Hello everyone, my name is Martin Rimes of Hit the Mark Trading, and I'd like to thank you for being with me today. In case you're wondering what we're talking about today, we're going to talk about trend and momentum trading. And I'm going to touch on the Rimes Range Bar sniper package on the AgenaTrader platform. Now, I just want to make sure that everyone understands I do have a website, Hit the Mark Trading. You can learn all about me. You can learn what I do, learn what the daily market update is about. The boot camp, which is for position trading. Just day trade, which is my most popular course. We're going to talk about some of that today. And even seasonality forecasting following the smart money. So you can find out more on the services page. I just want you to be familiar with this. Okay. Now, I've got something called Rooster Call. And listen, this is my early morning message, Monday through Friday. And basically, it's free for 30 days. If you're interested, go to the contact page. There's contact. And you put in over here the mailing list. You join the mailing list. Now, after you sign up for updates, you're going to be directed to a separate free trial of Rooster Call. You do not have to do any kind of credit card or anything. You'll get minimum 30 days free, minimum. And then if you are interested, you can certainly, if you're interested, you can certainly subscribe, okay? It's really good information. All right, so that's the website. Just want you familiar with that. Okay, let me get the presentation going. All right. Now, I want to thank AgenaTrader for hosting this presentation, and I appreciate the commitment to trader education. Today's presentation is going to show the next level of trading education, where the power of trend and momentum trading is placed on the chart. I'm going to show you specific entry, specific protective stop, and trailing stop suggestion. Immediate ideas for testing available using the AgenaTrader platform. Okay, now just to whet your appetite. All right, here's the platform action today. Now, did I take this trade? Absolutely, 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 absolutely. So let me just open this up a little bit for you. Okay. What a dream of a trade, right? Now, obviously, I knew I had to give the presentation today. So let me straighten this up. Unfortunately, I only caught this, right? From here to here. And then all of a sudden, when you see that using two contracts, it goes from 500 profit to 530 to 410. I mean, jumps all around. And of course, I had to do this presentation. I went ahead and exited. I call that a time stop, right? I don't have time to be in this anymore. And had I simply said, forget my presentation, this is more important, look at the money. Isn't that wonderful? So I'm going to talk to you about this program. Very good. Let's go back now to the presentation. Boy, sometimes it's like every day's a new day when I turn this stuff on. Okay. Okay. Now, I want to give you a brief overview of trend and momentum trading. It's going to be very brief. If you have seen some of my past webinars, you know what I'm already going to talk about. Now, we're going to have use of charts today. some canned charts, and now go to live charts. Seeing is believing, right? I'm going to demonstrate the trailing stop and a semi-automated trading environment. So remember, we're all adults here. Trading financial instruments using contract stocks or options is extremely risky. Only trade with money you can afford to place at risk. That's a nice way of saying only play with money you can afford to lose, because it's a tough business. Past results do not guarantee future results. Please consult a licensed professional prior to trading using any real money. Now, I did not ask if you can see my screen and all, and everything's okay. If you are having any issues with sound, you probably need to sign out and sign back in. If you can see the screen and you can hear me fine, somebody let me know, please. Okay. Briefly, I've been trading for 25 plus years. I launched this Hit the Mark Trading, a teaching newsletter with trade strategies, in 2008. Wow. In 2013, I started with a nightly video format because people said, you know what, I don't want to read. I've come back now to basically only commenting on markets that are showing some movement. And it's written and video once or twice a week as the market shows we need to look at the chart. Otherwise, it's detailed written comments, and I will put trade suggestions out there and suggested stops. I'll tell you what you should be looking for. For example, the soybean rally. Soybean meal started it all because soybean meal is a leading indicator for soybeans. And it looked like we had an island top, which is typically bearish. But I said if we get a breakout, gap breakout, it's extremely bullish. Boom. That's the only way I could have seen to have gotten into that trade. I have total immersion boot camps about 4 times a year. The boot camp is for position trading. The just day trade is total day trading immersion. And what do I mean by that? I mean, we spend 6 solid hours talking about nothing but day trading. We look at not just indicator, but we look at price movement. I'm teaching savvy, market cunning, right? We're looking at market linkage. We're looking at correlation. We are looking at what the big money is doing and how we can follow the big money footsteps. And you have to understand something. These are the people who create the volume in trading. I would rather be running with them instead of waiting, and they're already running, and you're saying, well, gosh, did my volume agree? Did all my indicators agree? Well, what's this expensive proprietary indicator say? You know? So we teach being right there in the moment. Everything I work with is applicable for stocks, options, bond, futures, or Forex. I've got various indicators experience. I mean, I used all the old war horses, all of them. I've spoken at various trading conferences and provided numerous webinars for traders promoting a relaxed and simplified approach to trading. Now, this is me, all right? And that's a window at my home office. Here's the home office, the trading chamber, all right? You don't need 5 monitors. I just like a lot of monitors. You do not need 5 monitors. Okay, so just briefly, I created my service due to a lack of straightforward trading methods. And when you see what we do today, you're going to say, my God, can it really be that simple? Okay, so keeping your trading simplified is my goal, whether you're day trading or position trading. And understand that day trading is the most demanding. So you must keep your trading simple so that you can react. In everything we do, we look at the charts with an all-encompassing point of view. Price action, trend and momentum, a price oscillator, and market linkages. One more reminder, You can sign up for the Rooster Call. It's I gave a good one today. If you are too lazy to go to the website, send me an email and I'll be happy to sign you up. You will then receive an email from my mail service that says, grant me permission to send you this. All right, what do you got to lose? Now, momentum trading, what is it? It is the art of spotting a market ready to move, selecting a trade, entering the trade with quiet confidence. I should put the word quiet in there. Quiet confidence, and utilizing predetermined exit points. And that exit point is not just profit. That predetermined exit point is also your protective stop loss. Momentum trading builds off a firm understanding of support and resistance, along with known areas prices attracted toward moving. So we're talking about trading directionally up or down. We're going to be riding the price wave rather than reacting to what might happen. This is usually accompanied by a price oscillator. And I don't care if you want to trade intraday or short-term trading holding over a few days or a few weeks. Today I'm going to talk about day trading. Now, intraday trading uses the daily chart for big picture and a short-term chart for tactical entries. As a general rule, the more volatile the market, the smaller the time frame. Markets will move in three directions, up, down, or sideways. If the market is sideways, we are greatly challenged unless the range is large. Now, this is so important because in 2017, other than a few notable days, we experienced some extremely tight range markets. And those tight range markets washed a tremendous amount of people out. If you tried to only trade equity index futures, I mean, washed out. Or you saw that maybe the move was so good in the pre-market or the overnight, but in the USA trading session, nothing happened. Very, very, very frustrating. So a lot of people trade ES futures. And I'm just suggesting that you must expand your horizon at times to other futures showing movement. Let's talk about oscillators. Oscillators derive their power from price movement. So for this reason, you really need to understand how to read price action at support and resistance areas. The oscillator then provides a trigger point for entry. Now, this is what most traders look like when they're trying to figure out which oscillator to use, right? They're trying to describe, hey, this seems like it works for me. Okay, remember the story about the 6 blind men and the elephant? Basically, the guy at the front holding the trunk, he describes what he feels, which is totally different from the guy feeling the leg, or the guy feeling the tusk, or the guy feeling the ear, etc. So my point is, a lot of retail traders are the same. The first guy might be saying, you know what, this adequately reads the market for me. This really does. And the second guy might say, oh, no, I prefer this one. Let's say that indicator is RSI. Oh, it's the best thing. And then the third one, here's where I am. Maybe this guy's saying, no, slow stochastic. And this guy down here says, I'm using this proprietary indicator. It reads the market well. I know exactly what I'm dealing with. And this guy says, well, I'm using commodity channel index. This guy says, well, I'm using Bollinger Bands, and plus I put the Keltner bands on there. I want all the bands I can get. Okay. Tons of oscillators exist. Everyone has their personal favorite. In the beginning, I used, now this was end of day trading. So I use slow stochastics, MACD, Williams percent R, and RSI, and the Bollinger Bands. Because at night, when you're relaxed, markets are closed, you've got all the time in the world to perform all types of analysis. But not in day trading, I'm sorry. So at present, I use just one indicator after years of trading and my desire to simplify. So I use the Commodity Channel Index, also called the CCI. Now let's have an important understanding, and I'm probably the only person who will tell you this. In a strong momentum market, all price oscillators works. I mean, everything works, everything. In a tight range market, all price oscillators will lose their predictive value, and I promise you, all of them. So this is one more reason to monitor several markets looking for momentum. Now, what is the CCI? The Commodity Channel Index is a price oscillator created by Donald Lambert. I've met Mr. Lambert. In a moving market, the CCI is shown to lead price. Wow, that's a heck of a statement. Do not take my word for it. Check out John Murphy's book, Technical Analysis of the Financial Markets. Here's a reprint. He only spends maybe half a page talking about CCI, that's it. But here's the key point. Here is what I want you to notice what he says. Notice that the CCI turns before prices at each top and bottom. That's big, okay? That's big. What's he talking about? CCI turning, price falls. CCI turning up, price goes up. Up, absolutely. Nice. Nice. Now, like anything, let's have a good understanding. Like anything, it is going to take time for you to read the CCI. Understand it is a price oscillator, and all you really need to know about it is we are comparing price with a simple moving average over a selected time span. Mr. Lambert suggested a 20-day period. Other people have modified Lambert's suggestion for intraday use using a 14. I've seen a 6. I've seen a 5. I've seen a 30. It's basically whatever speaks to you. Okay? We're going to focus on the 14 for day trading. How do you calculate this? Well, thankfully, most software platforms have this task automated. Well, they all do, quite honestly. So all you got to do, all you have to do is define the period, and the default will be 20 on all these packages. So you have to change it from 20 to 14. Now, I'll show you the calculation. You can study this on your own time. You can freeze the recording when you get the recording, and you can study this. Who does that? Engineering types, doctors, okay? People that simply have to prove this out. That's fine. I'm a visual trader. I know that the CCI is plotted on a histogram. I'll show you what that is. I know that the zero line represents major support and resistance. Great. Visual trader here. I know that the 100 line and the 150, or the minus 100 and the minus 150, represent minor support and resistance. Now we're going to talk about the diagonal trend line break on the CCI. It's very powerful. As they say in Asia, auspicious. So what we're doing is we're going to start drawing the line from the plus or minus 150 line. And we're going to wait until that breaks, and I'll show you what that means. It is so simple, and it's just a wonderful tool. So this is a busy chart, I know that. It's 10 range bar, ES. Don't worry, I'll show you today's action. So if I get my bouncing ball here, first I know you're drawn to the price chart, so let me just explain. The blue is a trailing stop recommendation, or red. It's designed to flow with price very closely and take you out so you don't have a big loss. So you can bank as much, I shouldn't say have a big loss, so you can bank as much as you possibly can. So he took out, say this here, he took out here. He's out. Yes, the market fell further. Big deal. Anyone getting this? Super, wonderful, love you. It's great. Okay, here's some signals. Notice how you're kept in the trade until there's a line that actually closes below the blue line. Look how it keeps you in. Isn't that wonderful? Guess what? He's out here. Okay, all right. Let's get more to the diagonal trendline break. Here's the CCI histogram. So I can start at 150, draw that line, and if it's broken, that's a buy signal. Look what happened up here. There's my buy signal right here, the blue one. Diagonal trendline break. There's my buy signal. Okay, beautiful. Diagonal trendline break. There's my sell signal. And on and on and on it goes. Down here, this just gives you another visual that says, hey, we got a short signal, or hey, we got a long signal. Now, for intraday use, let me remind you, we're going to adjust the CCI to 14 from the 20 default setting. And I want you to know something. At the end of this presentation, you will have enough information to immediately start testing. This is not everything I use, and I use filters and nuance, absolutely. But you will honestly be surprised at how well this works, right? Okay, so adjust for day trading from 20 to 14. You want to go to small time frames and moving markets with a good range. What does good range mean? It means markets that are showing that there's a range of over $200. Okay? The larger, the better. And I do believe in trading the rush hour instead of all day. We certainly feel like we're going to find a move every single morning in the rush hour. Now, there are 4 other CCI patterns that I use and teach along with other robust setups and filters and nuances, but I would probably say half the trades are accomplished with the diagonal trendline break. So this is yours free. Start testing it. Key points to remember: draw your diagonal trendline break at the plus or minus 150. Better trades are in markets showing momentum. What does that mean? It means gold. If gold is very slow, it is very dangerous. It means crude. If crude is very slow, it is dangerous because there is no momentum. And when there's no momentum, big hands can suddenly launch an order and you're thinking, wow, what happened? Years and years ago, back when the Russell 2000 was called the ER2, it was such a slow day. And all of a sudden, $1,500 drop, just like that, just $1,500, wham, bam, thank you, bam, and just out. Everybody, I was in a chat room at that time, everybody took it to the cleaners. I mean, just like gone, anybody who was in a trade. There's no explanation, and of course there's no recourse. So just understand that time, as a very, very general rule, time is not your friend in day trading if nothing is happening. Okay, 14-period CCI for intraday below 60 minutes. If you're going to look at a chart 60 minutes and above, and I know you Forex traders, you love to look at 60 minutes, you love to look at 240 minutes, you love that. I know that. Great. Change it to 20 CCI. Now, 3 entry rules. A diagonal trend line break with the trend, and I want you to do trend only until you've mastered this. Then you can explore counter trend trading. So you're going to draw from the plus or minus 150 line. I'll show you. Don't worry, I'm going to show you. Use the confirmation price bar unless the trend is super strong. Then just get in. You're being told, get in. So, protective stop rules. Listen, I believe, and I always say this, entries are easy. And I also believe that protective stop rules can be easy if you practice the same protective stop rule and don't deviate. So then what is the most difficult aspect of trading? Taking profits. Big time. It is so easy after the move has been an all-day move to scratch your head and say, yeah, I would have gotten in here. I would have exited at this place. I would have made $1,500, right? It is so easy to say that. But in the heat of the battle, sometimes I ask myself, how good does it have to get? How good does it have to, if I've got 500 bucks in a profit on 2 contracts, how good does it have to get? Because if you allow your ego to come in and say, wow, this $500, we can make it 1,000. Really? Providing the market decides to let you. Okay, so the protective stop rules, let me get back to this. If you're going to be long, you're going to place your stop, your initial stop. I want to emphasize the word initial. You're going to place your stop below the trigger bar or the prior price bar to the trigger. Whoever's lower. Now that's for day trading. So in other words, you get a signal. That's your trigger bar. And you say, okay, I got a signal here. I'm going to go long. Who is lower? That trigger bar or the bar previous? Because that's where you put your protective stop. You will be so amazed and thankful. And I have so many people write me on this. Wow, this changed my, I took a lot of notes, but this one thing impacted my trading. How about if you're going short? Okay, great. You get the signal. We call that the trigger bar. It says go short. Who's higher? The trigger bar or the bar previous? That's where you want to put your stop, whoever's higher. That's initial stop. Now, you can modify this with this range bar sniper program. We'll get into that. The range bar sniper program, you've got the option, if you would like, to use swing theory work for your initial protective stop. Now, I don't recommend this for small accounts because, I mean, let's say you're going to trade 2 contracts and it suddenly throws up that you need an $800 protective stop. You know, you look at that and say, okay, well, I appreciate that suggestion, but no. But if you know anything about swing theory, you will understand the logic. I happen to think that that could be too large a stop unless you have, you know, a big fat account. Now, use of trailing stop using a logic of a larger initial stop followed by tightening of protective stop as the trade moves into your intended direction. Now, there's nothing wrong with that. What does that mean? What did I just say? Let's assume you got that big stop, initial stop. And you're saying, my God, I'm not going to risk $800 here. But then you're also using a trailing stop, which if the market starts moving against you, will immediately tighten that stop, that initial protective stop. Okay, then you're covering yourself. It's a little bit better, more easier to take. Okay, so I've just got on here an example of November soybeans. This is a dated chart. 5 range bar chart. What you didn't realize we could trade soybeans? Of course we can day trade soybeans. I know people that trade soybeans. It just speaks to them. So let me get my bouncing ball. And I want you to notice that we've got target 1 here, target 2 here. These are all predetermined, either using the swing theory, or maybe you say, I want the first one to take off at $100, and the second one I'll just, I'll use swing theory, or maybe I won't use any target. I'll just let the trailing stop take me out. Okay, you're the trader in command. Okay. Now, this is an initial stop of $450. You don't have to use that. You can easily change it if you want. That's the beauty of the system. It's just letting you know, based on swing theory, what is swing theory? That's the next question. Here's what swing theory is. It says, okay, here was my last low. So I believe price is going to stay up here. It might come down here or here or here, but we are in an uptrend, and I think that as long as my stop is right here, I'm going to be totally fine, because if it breaks here, then we've broken that uptrend. That's all swing theory is. Pretty neat. I mean, look over here. Some people just trade swing theory. Look, I should buy when I break above here, right? Well, hell, that was a good move. All right. I feel like I'm giving a lot of information out, and I hope I'm not confusing anyone. All right, now here's 10 range bar chart. What is the difference? A range bar chart will say, okay, print 5 bars, or in this example now 10 bars. Print 10 bars, or I'm sorry, travel a range of 10 bars, up or down, I don't care, as long as you move a 10 range. That can be up 5 and down 5, and that'll borrow print, or up 7 and down 3, that borrow print. What I like about it is it helps me quantify all of my exit protective stops. So I always know what it's going to be, ballpark, which for me is around $200. Using the 10 range bar. Obviously, ES will be a little bit larger. And you can just see that, when this thing is caught up in some sideways action, guess what? It's rough. Finally, it broke down. And when you break down, my God, what a run. Here's a couple signals. Long. Okay, well, tried to go down, couldn't do it, came right back up. Remember we talked about that stop? So on this signal bar, who's lower? Looks like this one's lower. Entries are easy. Exits are the most difficult. The easiest thing to do is profit targets. You decide the target. So for example, I have a friend who trades money, manages money for people. 3-tick Charlie. He takes 3 ticks, that's it. Thank you very much. Appreciate it. I made 3 ticks. Boom. And you say to yourself, what's 3 ticks? Well, Charlie has been a trader for a long time. He's so confident in 3 ticks, he's going to be trading a huge amount of contracts at 3 ticks. And since he's a professional, he gets a cheap commission. A lot of people use single-digit targets. Typically, if I trade the NQ, traded it today, I like 15-tick and 30-tick. Okay, take one off, have a runner, and get out. Obviously, on a day like today, you wish that you didn't use any kind of a 30-tick, that you just left it wide open. What did I just say earlier? Entries are easy, exits are difficult. So this is the most difficult area for me to teach because, quite honestly, it's your relationship with money. Otherwise, you make it mechanical. If the CCI has started turning at the 150 line towards 0, that's your first warning on the histogram. We might be seeing momentum decline. If you cross the 100 line, remember, 100 is minor support and resistance, 150 is minor support and resistance. If you cross the 100 line towards 0, or minus 100 line, if you were short and it moves up towards 0, crossing that line, that's an exit. What the trailing stop does is capture greater gains. Now, what I've just described to you is robust across any instrument, across any chart time frame. And when I say any chart time frame, I mean it's going to work on a 15-minute chart, a 1-minute chart. If you decided to create a price bar where each price bar represents 3 days, guess what? It's going to work. So if you want volume charts, it's going to work. If you want, a lot of people trade 11,000 volume chart on the ES. If you want to use range bar charts like I do, if you want to use tick charts, whatever. You want to use the Hankin-Ashi, you want to use the Rinko, whatever. That's what we call robust. I do believe strongly that in day trading, you should use activity-based rather than time charts. If you have no choice, drop it down to a 1-minute chart. You can certainly watch a 5 and a 15 if you'd like. But your mission is to get into the market when the signal is provided, knowing how to read the trend and momentum. I do have no-go rules. I'm not interested in taking a trade if the range is around 200 to 250. I'm just not interested. Because by the time you get a signal that says, okay, take the trade, guess what? Maybe half that range is gone. So sure, it can go up a little bit and then just fall right back down. And then you're saying, what? And I've seen these sideways ranges last for hours. So I just, who's got time for that? It's not worth it. Sometimes I catch myself falling in it and it's like, you know, I know better than that. It is better to let price resolve the issue. What does that mean? You let price break out of the range. Now, if you insist, your oscillators are still working. The problem is they're moving up and down fast, and they're chopping you up. Wait, I had a buy signal. What happened? It didn't follow through. Let price resolve the chop. Now, I've built that in on the Rhymes Range Bar Sniper, and you can adjust it. I want to take 1 second to remind you, if you have a broker imposed limit, let's say you tell your broker, hey, I don't want to lose in a day more than $1,000. And your broker says, okay, we'll put that in. In a fast market, if they cannot get you out in time because it's a fast market. What's a fast market? Well, how about by the time you put the exit in, the market lurches 5 ticks, 10 ticks. Understand broker imposed limits, like a daily risk level, should not be relied on as a stop loss order. Okay, now I'm going to take a look at this some live charts. All these charts are created with AgenaTrader. I use range bars, but the methodology is robust for use on any time frame chart. Got it? And I want you to think about this. We buy into the dream of financial freedom through day trading, and the reality is this is a very tough business. If it was that easy, everybody would be doing it. This is why the Bitcoin has so many people jumping into this. I recently came back from a vacation in Peru, and a member of the extended family, in-laws, a 21-year-old kid, says, well, my friends tell me I should buy Bitcoin, that I'll become a millionaire. And I'm thinking to myself, you know, it's all the way down into Peru now. That this is just a no-lose situation. Okay? No trading is that easy. So accept that this is a very tough business. Chance favors the prepared mind. So you must have a plan. Then you've got to be able to follow the plan, which is 2 different things. And on top of that, you've got to be able to control your mind. If you cannot do that, then stop asking why the trading is not working. You already really know. You just don't want to admit it. So what if you had a trading assistant? Would that help? Your trading assistant monitors the markets and calls out trade setups. Well, what if all you had to do was scan a suggested setup and either agree or disagree? Right? You're the trader in command. Could this contribute to your trading being more relaxed? Could you let the market come to you, so to speak? So we're going to talk about the Rhymes Range Bar Sniper package. Put the power of a semi-automated trading strategy in your hands. And by the way, if you look in the chat, there's information on Top Step Trader. I'm in the 2nd day of a combine, 2 winning days here. And I'm using this AgenaTrader package for this combine. What the trading assistant can do is monitor multiple markets, monitor multiple chart time frames. So for example, let's say you have 5 markets you want to track, and you want to know what's going on the 15-minute. You want to know what's going on for me, the range bar. Example on crude, I'm watching 20, but I'm taking trades off the 10 range bar. And then maybe you want to look at a 30-minute chart. Well, your trading assistant is doing all this for you. The software scans for signals. 16 criteria are being checked before the scan says, you know, here's a signal. Take a look. Orders are preloaded when these conditions are met. That's the entry, the suggested exit if you're working with targets, a protective stop, and a trailing stop method. All this is done. You define it or use my suggestions. You get the signal and boom, that pops up on the screen. Hello. How easy is that? So you're the trader in command. And you look at it and say, no. Pass. Or you look at it and say, yeah, that makes sense. Boom. You get in faster. Once you get used to it, it gets better. Your assistant can automatically size your orders if you desire. What does that mean? Well, let's just say that you know that based on your account size, you want to put in a certain percentage to buy or sell every time you trade. That means if you encounter some wins and your account size expands because you're making money, automatically your order size will increase. If you start losing, everybody has a drawdown period. Everybody. Do not kid yourself. Everybody has drawdown. So the assistant says, wait a minute, we don't have as much to work with here, so I'm going to reduce the order size. Okay? All of this is according to your risk tolerance. You're simply left to trade the markets. You're the trader in command. You know, I'm using this AgenaTrader, but yet I'm entering on the Top Step Trader platform. And guess what? I can have order entry mistakes, sure. Everybody can. That's why I like this AgenaTrader. It's all set up. So what you've basically done, you have created a money management back office. You have created an assistant that says, here's the facts. Do you want to do this or not? Taking care of the details that you have predefined. So you truly are the trader in command here. All you have to do, your number one objective, is to confirm the markets are moving. You decide if you like the suggested trade signal or not. You enter or you decline the trade. You can enter the trade and then say, what am I doing? And you can take yourself out. Whatever. Agena takes care of the rest. Now, let's go look at some charts. All right. Okay, let me open this up a little bit. Okay, good. Hope you can see this all right. On the left is the NQ10 range bar. On the right is a 5-minute chart. There's what I want to do. Okay. And I like the 20 range here. Whoops. And these are some suggestions for stops, 2 different moving averages. In other words, for trailing. For trailing. Because a lot of people think if they have wider trailing stop, they can endure pullback and still be in the trade. Otherwise, here's the built-in stop right here. You're a lot closer to the action. So you don't give up. If it goes against you, you don't give up as much. All right? If you see that there is no signal, he is assuming hey, we gave you a signal down here, you should still be in it. What do you mean? You know, why do you need more signals? You're already in that thing. That's what he's assuming. And a lot of people say, well, what if I just didn't get in? Okay, great. Diagonal trend line break, go long, right? Probably about right here. Diagonal trend line break, whoops, more like this. Diagonal trend line break, go long, right? Probably about right here, is it? Remember your stop. Get this where you can see it. Remember your stop. If that's a signal, who's lower? This guy or this guy? That's where your stop goes in. So boom, there's your stop. And up we go. How good is that? Well, it's just wonderful, isn't it? Remember, there's a lot of different criteria in here trying to filter things out for you. Trying to figure things out for you. I've got it where if we get locked in a 2-bar range, he doesn't want to take the trade. Looking back I forgot what it is, 6 bars or something. I'm looking back and I'm saying, okay, I don't want to take a trade if it's just 2 bars. If it's 3 bars, he'll take the trade. And you can expand that. You can say, no, I want it a little wider. That's fine. That's user defined if you want to. I realize this doesn't make much sense to people who are unfamiliar with how I trade, but I'm just letting you know. What's the objective? Trying to just get rid of chop. Now this is a 5-minute. I will watch the 5-minute. I'm taking the entries off of what? The range bar chart. Can you take entries off the 5-minute? Yes. But the purpose of the 5-minute for me is just to see the big picture. What is the big picture? What I don't like about time-based charts is right here. Okay, 1 bar is this size. The other bar is this size. Okay? Well, let's take a look at this. Okay, you go short and you're using a tight stop. Guess what? That thing probably reached up and grabbed you and took you out and then continued down a little bit. If you use my method of protective stop, here's the guy who's higher. So the maximum favorable excursion, you like that word? Maximum favorable excursion was right here. In other words, you didn't get stopped out. Okay, here's the signal. Where's the stop? Stop's right here because that's lower than this. Now, that one stop keeps you in the trade. How good is that? Just the stop alone today is worth your time you've spent with me today. Just that stop alone. Okay, let's take a look at crude. Now, my message to people today was I was banging the table. One more time to remind you the importance of $62 on crude at this point in time. $62 represents, in my opinion, bullish or bearish bias on crude. If we're above it, it's bullish. If we're below it, it's bearish. Okay? And you can see what happened in the pre-market. They come right up to it. And what they do, they rejected it. This is like waving a red flag in front of a bull at the bullfight. This is what we do. This is what I teach. We recognize these things because they are doing this. The professionals are looking at 62. This is exactly why when we breach through 62, they keep pushing it higher because they know what they've done. They've managed to now flip this from being bearish to being a bullish bias. Got it? Now over here, it looks as though the 5-minute chart gave you an outstanding opportunity. And notice we have I call this a cluster. When you get a cluster, it is telling you, it is pounding the table. This is likely going to be the start of something very nice. I couldn't agree more. Boom. A cluster. All right. Let me go now to the presentation. Let me draw some more lines for you. So here's a diagonal trend line break here. Whoops, that's an arrow. You know what I meant to do. And here's where we go up. Diagonal trend line break here. Here's where we go up. If that stop is whoever's lower, the red or the green's lower, guess what? You're safe. You're still in the trade. All the way up to here. How do you like that? I hope you join the people that have written me to say, hey, thank you. I listened to your free presentation and your stop is really nice. If you want to learn even more, that's what I do with my seminars. Okay, let's get back to the program. If you're interested in learning more about this, there's a 14-day trial. What does that mean? It means you buy the program or you rent the program, and if you don't like it after 14 days, get a refund. After 14 days, you bought it. Run your test, extensively test. Gain your quiet confidence. Wash, rinse, repeat, just like the professionals do. More information, hit themarktrading.com, go to the Clients and Resources page, click on AgenaTrader. Okay? I want to remind you, if you like what you saw in my examples, the Just Day Trade course, that's what we do here. I appreciate this opportunity to speak with you. I thank you for your patience. If you have any questions, I'm ready to take any questions you might have. Okay. Do you have a picture of your NQ trade today? Yeah. Let's see here. NQ. Michael, I took this one right here. Hang on. I want to make sure you can see this. Right here. That's the one I took. And I tell you what, it was tough when you see you've made $500 and you're asking yourself, how good does it have to get? How good does it have to get? Right? So if I didn't have to do this presentation today, I'd probably have left one on. And I can either run this by protective stop on the moving average, or I can use this. Why did the trade work today? Not because I traded it. It worked because we had moving markets. When is the worst time of year that you can trade equity index futures? The absolute worst time of the year. The first 2 weeks of August. So just plan on taking your vacation, because the whole trading world's on vacation. We find that crude and gold still work. But beyond that, if you look at how small the price bars are the first 2 weeks of August, and then go and look at how many times in 2017 we saw that same tight range as a day range. And that's why so many people, it was very unpleasant. But gold and crude were moving. I took a trade on the YM by accident, lost 30 bucks. I took a trade on the ES, I lost $262. The NQ made over 800 bucks. So what I'm doing this top step trader thing because I just want to prove the AgenaTrader thing. And I'm probably going to start some kind of a blog or something on that. I might do that on the Trader's Yard. So that's what I'm doing. Okay. Due to my poor connection, I would like to ask you whether this webinar is being recorded. Absolutely it is, sir. Has the volatility affected your system lately? Yeah, it's improved it quite a bit because everything's moving. Everything is moving. One of our best days ever was last Thursday. And guess what? I broke my rule on Friday and I said, you know what? I'm going to trade on Friday. And in the morning, it was just absolutely a disaster because we were locked into not moving. So fortunately, the market opened up for recovery. But all we can do, and this is what my work with auto trading has done in the past, is reinforce that if you know you have an edge, you're going to have, nothing is 100%, you're going to have drawdown. You're going to. So there's no way around that. And you know, I use larger stops than some people are comfortable with. So for example, if I know on my range bar chart that I'm using a $200, $220 stop, guess what? 2 contracts and I'm out $400 if it goes against me. So the only way that I could have confidence is knowing that the win rate is extremely good. But even me telling you this, you still have to make it your own. You have to take ownership. I've been doing this a while. I can certainly show you the signals, but it takes time. But this is all I got on the charts. This histogram is designed to help you. If I've got more than 5 to 6 bars on this above the zero line, I have an upward bias. If it's 5 to 6 bars below the zero line, I got a downward bias. That's all factored into this program. Incidentally, anyone who is trading and they decide, you know what, I want to use this moving average here as my protective stop. Okay, so they wrote all this thing up. They wrote this up. They wrote this up. They wrote it up. They're still in the trade because it's a wonderful day. Could this have gone all the way down, just gone down and taken them out here? Absolutely. Absolutely. But we're fortunate. Markets are running. Markets are moving. Okay. Any other questions? Any other questions at all? I just want to make sure I'm checking where all the questions might be. I think that's it. Okay. If you have any questions, first off, I want to push this to you. If you have any questions, Martin at let me get this where I can see it. Martin at hitthemarktrading.com. Okay. And I would really suggest that you go to hitthemarktrading.com and check out the resources there. And yes, I have recorded this. I've enjoyed it. I think I'm going to do a presentation in March on the 19th with Top Step Trader. Get on my mailing list and you'll find out how to sign up for that. How did I get involved in Top Step Trader? I've got some clients that are funded traders and they have talked to the Top Step people and said, hey, you should talk to this guy. So I decided, yeah, I'll try the combine thing. Okay. Beyond that, if you take the Just Day Trade course, it comes with a month of the live room where I call out market observation. Okay, a real-time market observation room. What does that mean? I say, okay, we have a trade setup. Here's where the stop would go. That kind of thing. Okay, I've enjoyed it, and I will talk to you. Thank you, Robert. I appreciate that. Thank you. I'm glad you find it interesting. I don't see any other questions or chat, so I'm going to go ahead and let you go, and I will talk to you later. Thank you all for attending today. Bye-bye now. Thank you, David. Bye-bye now. Thank you, Robert. Thank you, Michael. Good to see you, Michael. Okay.